Consolidation risk is a little bit too high, but the parameters for that at the close are a little bit different than at the open. JD could easily be a trigger here by the end of the day, so we'll see. If it is, I'll go after it. But as it sits right now, no new triggers on the board, so nothing new to go get into here this morning. And I'm not that surprised. I talked about it on Friday last week, Monday this week, just about the general consolidation of things that is coming in. And I know when I use that word consolidation, nobody loves me. Everybody wants to say consolidation, but it's a reality of the market. And when we have a system that is entirely designed to deal in trend, consolidation doesn't quite match, and part of the reason for the whole survive the chop, thrive in the trend mentality here with that. But we do have a trade on the board, and that's Verizon. It's been kind of ho hum boring, not a whole lot to it here of late. Let's see what the option and the stock values are here. It looks like the option value is 244, and the stock value is almost 58. Current stock price, stock profit levels 59.47. So we have a ways to go to get to an exit or a profit level. Our auto exit dates we're still into next week, so nothing there. So I'll just update the price here to 244. Brings the gain to about 500. For the only trade this week, and I'd much rather see more trades than fewer trades, but I'll take what the market decides to give here. So that brings us up to 7,700 in gains here this challenge. Remember, on Friday we did pull the original 3,000 out of the challenge here. Okay, so very easy to do in terms of running the challenge here this morning. I mentioned JD, possible bear trigger, consolidation risk just a little high, but you can see the 3.7 cross down here today. It's below the 50 on the Stoke 39.1, so it visually has that same element as any bear signal here. We have some lower highs that have come into play, some lower lows that have started to come into play. So we'll see if it triggers or not. Some of the stuff I thought would trigger, just really hasn't. We saw Micron, it didn't trigger. It just had the one bad day, right? And is that indicative of a downward trend to come? Well, the algorithm said no, and in those cases, we have seen we haven't seen any sort of real trend develop. And by real trend, I'm talking about not did it move a few pennies in the direction that 3.7 went? No, I'm talking about a stock that has a good probability of moving to average true ranges, right? And that's what the algo's looking at. It's not looking at is this stock going to go up or down? Right, which is kind of the natural question, but that's not what it's looking at. It's looking at the probability of the stock moving to average true ranges or trending. And, because it doesn't do any good to go and grab something on a day like on Wednesday, like Micron, right, where 2 days later the stock hasn't hardly moved anywhere. The options have gone down 15% because the implied volatility has come out. And then if you get a jump here to 33.5, the option just absolutely gets crushed. And so it just doesn't make any sense. Need the probability there, not just this, where's it going to go tomorrow type of mentality, which is what the algo is definitely searching and, digging for here. Now, there's another stock on the challenge watch list, and it's not triggering bullish or anything. Doesn't have any sort of trigger on it. But I wanted to show it to you because as I was going through the various stocks on the watch list and just looking at some of the longer term charts with them, Home Depot just jumped off the page. About as picture perfect of a little bit of a cup and handle pattern as you can have. I guess, true technicians would say, well, this should be more rounded right here. Shouldn't have the drop down and the pop back up. But okay, come on. It has all the general principles of a beautiful cup and handle pattern coming into play here. And let's face it, there may not be a stock better equipped to deal with a Fed kind of rate cut cycle than Home Depot. And, this is one that I took a bearish view on this year as, the Fed was kind of in this rate tightening cycle. And, that if they continue with that is going to put a severe crimp on housing. But they have reversed their course. And when you look at Home Depot fundamentally, yes, their numbers are not going to be as good in the next couple quarters. But if the Fed is cutting rates rather than raising rates, those numbers will go back up, and it will be very strong. And to see that be a catalyst for 250 to 280 to come in on Home Depot would not be a huge surprise. And let's face it, Home Depot's been on a year and a half consolidation essentially, right? Here around 200. So, when we see a breakout, it could be pretty darn major there for Home Depot. So, I did want to show you that. Also, want to show you J.P. Morgan because of the chart here, and you can see it almost has a 3-7 downside crossover on it. In fact, it does right now. Okay, great. It does right now. I'm not sure if it will trigger for the challenge or not. It wasn't a 3-7 crossover when I ran the scan just before I got on video. But it's trading below the 3, the 7, the 20. You see the Stoke 39.1 below 50. This is kind of a same type of chart element as JD. So we'll be looking at this here into the close as well. And, JD and JP Morgan trigger, we definitely have the cash to go out and take advantage of those stocks and of those signals here. As far as the overall market, very red today. Very red. In fact, if you look at my board, extremely red. But where's the green? It's utilities, it's healthcare, it's consumer staples. That's where most of the green is. And Disney, right? We see things like Bristol that lagged yesterday, leading today. Some of the energy names are under a little bit of pressure here this morning, even though oil is green. We had gold last night that took a pop and has been fading pretty much ever since, but you can see this pop here. This was on the Chinese economic data that came out, the industrial production that hit a 17-year low. Now, what I find to be really interesting about that is industrial production last month grew at 5% in China. That's a 17-year low. You think about that. That goes all the way back to 2002. That was a year after 9/11. That's been a long time, right? I mean, we had the financial crisis happen in that time period, 2007, 2008, 2009. Right, we've had the Euro crisis, and we've had all sorts of stuff happen while this number has been higher than what it read here today. And so 17-year low created some consternation. We saw, European markets drop. We saw gold pop, but gold has, pulled back off of its highs here, pretty substantially. I mentioned this morning, I put in the notes or into the message feed, the U.S. industrial production number, same number as what China reported. China was a 17-year low at 5%. The U.S. beat expectations at 0.5%. Really interesting contrast. It's been that way for a long time, so nothing new. But, we have a better than expected industrial production number here in the U.S. That's 1/10 tenth the number that China was, and China was a 17-year low. But just tells you the growth engine that China has been, the juggernaut that it has been. And, let's face it, there's a maturing of the economy that has been happening over the last 10 years. And, so some of those numbers, they're no longer double digit consistently high there with it. So anyway, we saw that in the data. But, when we just look at the market overall, it is what we talked about, earlier this week and what we talked about Friday of last week. It's a consolidator around this 2,900 level, right? And we talked about it. We ended up seeing some bullish signals come into trades and into stocks on the watch list right back here last Monday, Tuesday, Wednesday, and great. Got some nice move. Market itself moved, but then Friday we looked and we started on Sunday night, Monday to hit up to this 2,900 level. And we talked about it, said this is a very natural consolidation point. Why? Not because it's some big, bad, round number or anything else like that, but that there's nothing else for the market to sink its teeth into. Right? And, that is something where I know we can make the argument, well, there's this geopolitical thing going on. We have the stuff in Hong Kong. We have this potential stuff in Russia. We have the potential stuff, when it comes to, the Middle East and the Gulf of Oman and all of that. But, let's face it, none of those are, have great global ripples, right? And the market has calmed down over the last 15 years with stuff like that. And so it needs to be pretty major to create a pretty strong ripple there. So the market just really has not had a lot to sink its teeth into. It's just kind of the same old as, when we look at the news cycle, we look at the economics and we look at the earnings, it's the same as it was last week at this time. Right? There's nothing too different there. So the market has just kind of chopped through, a 34-point range this week. It's been a very tight range as well for, the value of the market, just over a 1% range here this week. And that's what we're seeing here in the market. If we look at something like small caps, right, to see, okay, is there any real difference in in how these are performing this week? No. They're pretty flat here as well. If we look at large caps, I'm just going to bring up Dow futures. You say, well, are they doing anything different? Nope. They're about the same. What about what about tech and the Qs? Are they different? No, not really. Just same thing. And as I mentioned in my note this morning, I would not be surprised to see this environment continue for another little bit, and at least until we start to see some earnings, and we're going to start to see a few of the Adobes, the FedExes of the world, just some of those early earners, the Microns of the world. We'll start to report here in the next couple weeks, but it's very common to have some summertime lulls where there's just some serious chop and very little trend. That said, it's nothing to fall asleep on. It's nothing to go, well, okay, it's just going to consolidate for the next week, because it's a market. There are opportunities, but as we have seen, at least for the challenge algorithm, the opportunities are just fewer, in a time like this, and that is to be expected there. We've done some trainings on trading the chop and using the stochastics and using the CCI and all of that. And if you search in the video library, just CCI trainings or stochastics trainings, you can check those out and employ those here in this market. But even this week, I haven't seen a lot of that I really like. Most of the bigger movers have had some sort of news catalyst associated here with them. Disney, for example, Netflix, for example, they've had the news catalyst, to drive them. But outside of that, most things just kind of, left to flounder there, left to just kind of dance around. Facebook's an interesting story here this morning with the cryptocurrency and with some of the backing for the cryptocurrency and how game changing it could be for Facebook. And I keep my eye on it, but let's face it, Facebook has had 2 down days and then just this slow, steady climb back, and right back here to 180, which has kind of been its gravity point here of late. So is it something to buy? For me, not yet. But eventually we will see it shake out. We will see, trends, continue to come back into the market. Typical markets on a given year, 30 to 40% time is trending. 60 to 70% of the time, it is non-trending. So, that's to be expected out there in the market. But have a look at Home Depot. Especially if you're looking to add something, from a retirement account standpoint or long-term position type standpoint. I'm not advocating buying it here today, but is having one that you can take advantage of over the coming year. Have a look at that. And then, later on today, we'll see if JD triggers for the challenge or, JP Morgan triggers for the challenge, or if something else emerges and triggers for the challenge. And in the meantime, we'll continue to ride Verizon. And, it would sure be nice to see Verizon make that move here up to 60 and, get us, at least, yes, during this light signals, at least still be able to pack some gains here into the challenge, even if it's on a little bit of a lower pace than what I would hope for there. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.